Meanwhile, before the opening bell this morning, General Motors said its profits fell more than 50%, but the quarterly number was still better than Wall Street estimated. The automaker reported strong sales of pickup trucks and said its European operations are improving but still posting heavy losses. Phil LeBeau has more.
From the assembly lines in Michigan to the showrooms in China, General Motors is revving up profits. Excluding special items, GM made 96 cents a share last quarter, 2 cents better than Wall Street was expecting.
Market share was up, revenue up, profits up, cash flow up, so a really strong quarter across the board.
GM's making most of its money, more than $2.2 billion, in North America, where U.S. sales are being driven in part by new versions of the Chevy Silverado and GMC Sierra pickup trucks. CEO Dan Ackerson says the launch of those trucks has been near textbook perfect. Those trucks have helped GM hold on to its lead as the #1 automaker in the U.S., ahead of Ford, Toyota, and Chrysler. Meanwhile, GM reported a 60% drop in earnings overseas. It cut losses in Europe, and sales in China remain strong. With GM holding $26 billion, investors are asking when the automaker will return some of that money to shareholders with a dividend.
Priority number 1 is reinvest in the business. Priority number 2 is to maintain and strengthen our fortress balance sheet, which we've been continuing to do, including activities through this quarter. And priority 3 is to generate returns of cash to our shareholders, and that's something that we'll continue to evaluate over time.
Today's earnings pushed GM shares close to their highest price since the company's IPO in 2009. With the U.S. Treasury scheduled to sell its remaining stake in General Motors over the next couple of months, GM is hoping the stigma of being bailed out by Uncle Sam will fade away. And with it, any doubts the new GM will repeat the same mistakes that led the old GM to file for bankruptcy. Phil LeBeau, Nightly Business Report, Chicago.